Good morning, and thanks, Frank, for allowing us to be part of this presentation this morning. It's a pretty exciting story we've got in front of us. We're going to take you through the tremendous turnaround opportunity that we've put in place, as Frank mentioned, over the last 3 years, implementing an optimized mine plan at our Segovia operations as they anchor for us to be able to do this. We are the leading producer of gold and silver in Colombia. From 2010, when our company was founded by Serafino Iacono and his business partners, we've produced over 1 million ounces of gold from our projects. By the end of this year, we'll reach 1 million ounces of gold just from our flagship Segovia operations. Our primary listing is on the Toronto Stock Exchange, and we followed up last fall with a listing on the OTCQX. We've got 48 million shares outstanding, and including warrants, we've got some 6-year warrants listed on the exchange with a strike of 221 Canadian, currently trading around $1.75. We've got a total of 63 million shares right now, pretty tight in our fully diluted count.
For the best editorial on junior mining, visit cambridgehouse.com/mining. Click the link in the description below to learn more.
Since early 2010, when we started implementing our optimized mine plan at Segovia, we've been reporting quarter after quarter of increasingly improving operating and financial results. Over the last year, shareholders and investors have been starting to get on board with the story, and we hit new highs in our share price and our market cap last week. As Frank mentioned, we've done a tremendous job at reducing our debt. It's down to less than half of where it was 3 years ago. The gold notes that are due in 2024 are listed. We've currently got 83 million at the end of this month after the next payment. And we've increased the balance sheet strength by turning our working capital deficit as positive with a $33 million cash balance by the end of December. We've got 3 projects in Colombia. We also have a 17% interest in Sandspring Resources and its Toroparu project in Guyana. I'm going to mention most of my time this morning looking at our high-grade Segovia operations, which is our core producer and our flagship property when it comes to our exploration upside in the near term. Now, Segovia is a very high-grade project. We've drilled about 1,000 holes at over 150,000 meters over the years. It's averaging over 11 grams per ton. We reported our maiden reserve for the first time in 2017, at the end of 2017. We're continuing to drill in 2018 and another 20,000 meters coming in 2019. And we were pleased to see middle of last year when Mining Intelligence released a white paper anointing Segovia as one of the top 5 highest grade underground gold operations in 2017. In 2018, Segovia's head grade averaged 17.1 grams, and based on the early results of the others, we're confident that we'll stay in those top 5 when 2018 comes around.
For the best editorial on junior mining, visit cambridgehouse.com/mining. Click the link in the description below to learn more.
Our operations at Segovia lie within a unique 3,000-hectare land package where we own the land in perpetuity. And we've got 27 known veins as characterized by those red lines that we're currently only mining 3 of. You'll see in the next presentation one of the suppliers that'll help us as we move forward identifying the blue sky opportunity. Key to the optimization has been working on the modernization of the Segovia operations, focused on mine development, but more importantly, including mechanization of underground mining operations for the first time, bringing in Mookies, scoops, jumbos, and others to help improve the efficiency and increase the material handling underground. And when you do that, training of your employees is extremely important. As you can see in this photo that we entered in this year's PwC PDAC Art of Mining contest, Jennifer Hoyos is the first woman certified through our training program to be able to operate heavy equipment underground in a mine in Colombia. And we're quite proud of her accomplishment, and we've got a few more qualified since. And we've been working on the working conditions underground. Here you can see the Howden exhaust fans that sit atop the Providencia mine ventilation shaft completed last year, and we're completing similar ventilation shafts at El Silencio and Sandra K to continue to get better air and quality of air into the mines and reduce heat, etc. And our Maria Dama plant at Segovia, which we've upgraded to 1,200 tons a day, is continuing to be expanded, and we should have it up to 1,500 tons a day by the end of the second quarter this year, teeing us up to be able to move forward with the continued expansion that we expect to see in our production platform going forward. Health and safety has been important, and with the help of people like Donovan Pollitt, who's here this morning, back in 2016, we put programs in place to create a culture amongst management and employees to improve our health and safety. And we've been successful in reducing 80% of the lost time incidents and the days lost since 2016. The other thing that's been really important is that Colombia is known for having an issue with illegal miners. We've tackled that almost from the beginning by putting contracts in place with local artisanal miners to form cooperatives where they bring the material to us to process instead of using illegal mills and mercury. And we've been very pleased with the results we're getting out of that program in our local title. And no company, I think, can operate in a community without respecting its social license. We're very proud of the many programs we have, but the one that comes to most mind for us is our school system that we provide for all the students who live in our Segovia and Marmato title and come to school every day with us, and we're expanding to a high school level this coming year. And the payoff for us has been in production and other statistics. We hit a new high in 2018 with 218,000 ounces of gold, double where we were just 5 years ago. But most important, even with the stock price appreciation we've seen, we're still not getting the comp that many of our peers doing 200,000 ounces a year get. In 2013 and 14, we tackled our operating cost. And you can see from that point forward, we have a well-controlled operating cost. We're averaging about $700 an ounce cash cost. And with our capital investment in exploration, modernization, et cetera, at Segovia, we have an all-in cost that's pretty steady around $900 an ounce. But probably the thing that gets me the most excited is our opportunity to generate cash. This year, we finally passed through the $100 million a year EBITDA level, about 10 times where we were just 5 years ago. But again, when you look at our valuation versus our peers who are also doing about 100 million, we're not getting the same kind of valuation just yet, even though our stock has been rising. The other benefit of being able to generate that cash flow is we started getting back into what do we do about Marmato. And we're increasing our investment there by exploring the underground deeps zone, which is characterized by that orange carrot-like shape below where the current mine is. And we're continuing our expansion studies this year, hopefully towards a PEA by the end of 2019. So why invest in Gran Colombia? I think the main reason is when you look in on the space and you see companies doing 200,000 ounces a year, $100 million of EBITDA, you don't find them with the valuations that we have. As I said early on, people are starting to get on board with the story. We'd like to think that you won't miss the train, so come out and see us at booth 710 and we'll give you more information. Thank you.